In terms of institutional adoption, the cryptocurrency industry has come a long way, but there's still a long way to go. Institutional investors have entered the markets in greater numbers than ever before, but most cryptocurrency exchanges lack the infrastructure to adequately support them. Regulators have not provided the clarity that is needed to assure these investors that their activities are within the law. As such, while the crypto industry is continuing to grow and mature, institutional traders are still somewhat underserved by most trading platforms. Facing a lack of liquidity and a lack of legal certainty, most of them still rely on OTC desks. Recently, finance magnates spoke to Ilan Sterk, who serves as VP of Trading at Hexa Group and Orbs, and as the VP of Business Development at Aleph-Bit Technologies. Sterk specializes in digital assets, global assets, derivatives, and FX, with expertise in investments, risk management, compliance, and technical analysis. Sterk spoke about the progress that the cryptocurrency industry has been making in terms of adoption into other industries, and about what institutional traders need before they can enter the cryptocurrency markets in larger numbers. Sterk will be moderating a panel at the upcoming Finance Magnates Barcelona Trading Conference from July 10th to 11th. The panel is entitled Building Blocks of Institutional Adoption. For more information, visit btconf.io. That's btconf.io. So let's get started. Ilan, can you tell us a little bit about yourself and how you got involved with the cryptosphere in the first place?
Okay, so I'm a 20-year veteran of the global security markets. I started my career in the global security markets at Oscar Gruss & Son, an American brokerage firm. That is where I learned the ropes of the global markets. I then founded the global desk at Klal Finance Batucha brokerage, and throughout my work there, and also after its acquisition by Bank of Jerusalem, I managed the global trading desk and FX. And then I decided to make the move from the traditional capital markets to the cryptosphere. The crypto world is a new and challenging world that combines innovation and technology, speed and disruption of traditional industries like banks and the traditional capital markets. And I found this very appealing, and I then joined the Orbs and Aleph-Bit. I specialize in digital assets, global assets, derivative, and then Forex, with expertise in investment, risk management, compliance, and technical fundamental analysis. I'm also a lecturer at the Open University MBA program in financial systems and capital markets.
Quite an impressive resume. So tell us now a little bit about Hexa and Orbs and Aleph-Bit and what you do there.
So Orbs Group is the largest blockchain and crypto firm in Israel and one of the largest globally. The group has four main activity. Orbs is the technology arm which develops blockchain infrastructure. Orbs raised $180 million in private sale a year and a half ago. We launched the Orbs V1 product, the blockchain, around 2 months ago and listed our token in tier 1 exchanges. Hexa Labs helps establish enterprises and global brands explore new business application of blockchain. Hexa raised more than $500 million for projects in the last 2 years. Hexa Finance is the VCR managing the group's fiat and crypto funds. Last is the Hexa Foundation, which is a non-profit organization focused on using blockchain to create a social impact. So at Orbs, I developed crypto trading infrastructure with most of the tier 1, 2 exchanges and implemented infrastructure with leading tier 1 OTC desks. I'm responsible for all the digital asset trading and the group's investment in crypto and fiat. It's tricky to manage crypto and fiat in one portfolio and the associated risk factors. I was also a member of a small executive team at Orbs responsible for listing the Orbs token in top exchanges. Aleph-Bit connects manual and algo crypto traders with funds. We are looking for crypto traders from all over the world. After a trial period of 3 months on our own paper trading platform, which has real-time quotes and takes into account slippage and commissions. We then, after the 3 months trial period, we analyze the trader activity and returns In cases where there were high returns, they get funds allocation and then trade at one of the leading exchanges with Aleph Bit's capital. At Aleph Bit, I'm the VP Trading and Business Development, forming partnerships and finding crypto traders around the globe for the trading program.
Wow. Okay. So you're your hand in a lot of different things.
Yeah, absolutely.
Yeah. So, Ilan, you're moderating a panel at the upcoming Finance Magnet conference regarding the adoption of cryptocurrency and blockchain technology by institutions. So I'm curious, in which aspects of the financial industry do you see blockchain and cryptocurrency being adopted the fastest? And in general, where is there the most interest in blockchain and crypto from the finance industry?
So blockchain technology is already possible in financial transactions. So we start with the HSBC Bank that did the first LC, letter of credit transaction, a few months ago using blockchain. For a long period, there was speculation about when will the institutional investors start to invest in crypto. And I think that one of the most significant moments is the announcement by Fidelity, which manages over $7 trillion in assets, that they set up a subsidiary called Fidelity Digital Assets, which will provide custodian services to digital assets for institutional investors, trading services in a number of markets, consulting services and strategies in crypto. There is no doubt that the entry of a significant institution such as Fidelity to the crypto markets constitutes an important milestone for the advancement of all the field. We see the enterprises in the US, for example, that they are starting to accept Bitcoin via apps like BitPay. I can mention AT&T and Flexa with Nordstrom, Whole Foods, Starbucks. So the adoption is starting to gain traction. In addition, I certainly believe that the recent announcement by Facebook about the Libra blockchain, which would run the Libra coin, the Libra Association, with founder members like MasterCard, PayPal, and Visa, eBay, Uber, and also the Calibra, which is the digital wallet that will store the Libra cryptocurrency and will enable payment transaction, is a turning point that can lead to mass adoption of digital currencies in the future. Another thing, so when discussing the institutional exposure to Bitcoin, we can see from the CME Bitcoin institutional interest that it hits new records, up 80% year over year. According to one of the world's largest Bitcoin derivatives marketplace, the number of open BTC1 contracts reached a record of $250 million in notional spot value last week. This equates to around 26,000 Bitcoin, which shows, as I mentioned, a huge 80% increase compared to last June's figures.
So why Bitcoin? I mean, there's still so many issues with the Bitcoin network, as I'm sure you know. And you know, there's a lot of debate over what the future of the Bitcoin network will be. So I wonder if you think that Bitcoin, you know, in the foreseeable future will be the asset of choice for institutions, or do you think that it's just a temporary thing? It's just the most popular, you know, the largest, and you know, therefore considered to be somewhat secure by institutions, or will that change?
First of all, I think that the institutional they will focus on the top currency, the top cryptocurrencies, and I think that but still that but we don't see a widespread adoption. Maybe we can talk about a little bit. I will talk about the widespread adoption. And so I think that institutions all over the world avoided crypto assets because of multiple issues. The first being custodianship. As I mentioned before, Fidelity has started to offer custodianship services, and also Bitcoin and Coinbase launched custody services. So hopefully the custodianship issue has been resolved.
Okay.
The second issue, which caused institutionals to avoid crypto assets, is lack of regulation and lack of trust. After some fraudulent activities took place, in order for investors, and we can talk about institutional investors, to gain trust in the system, regulation must be put in place. I can say that at Orbs Group, we took the responsibility and the mission to build up the ecosystem, including working closely with the government offices for building up proper and advanced regulation, which will support the new world. So institutional, they need the regulation, absolutely.
Right. In your work with the government, working with regulators, what are the kinds of regulations that you're trying to build? What are specifically the regulations that you think the industry needs?
When we so the regulation, maybe I will start with the current situation in Israel.
Yes.
Most of the banks in Israel don't accept any fiat that originated from crypto. Although a new amendment to the AML regulation includes mention of crypto, certain issues remain vague, and the bank's future moves remain unknown. So also the Israel Securities Authority warned a few months ago of substantial risk in the crypto markets. So after such a warning, how can institutions invest in crypto? The regulation in most of the world is unclear, and this is another complication for institutionals. In my opinion, clearer regulation will lead to more participants in the digital asset market. So again, it's all about regulation.
Right. So the thing that we really need more than anything is just clarity in the regulatory sphere.
That absolutely, yeah.
But kind of on the other side of things, so we need regulation in order for institutional adoption to increase. But what about the technological side of things? Can better technology speed up market adoption? And, does the trading infrastructure that we currently have, does that trading infrastructure adequately support institutional cryptocurrency, blockchain, institutional traders and investors?
So I will share some of my experience. At Alipbit, for example, we need to provide sub-accounts to each trader using our funds. Currently, only a few exchanges offer such functionality versus trading systems in the traditional markets who offer this as a standard part of their interface. So when discussing institutional adoption, this is one example of how technology can speed up market adoption. You must have a sophisticated trading platform. The institutional, they are not, they can't trade at a simple trading system. They must have a sophisticated one and with lots of functionalities.
I see. So what kinds of functionalities specifically do you think that the ideal kinds of trading infrastructure needs in order to support institutional traders?
So first of all, as I mentioned, it's a sub-account. Second thing is algorithms. In the traditional market, you have many types of algorithms for trading, like VWAP, volume-weighted average, TWAP, time-weighted average, percentage of the volume. These kind of things you don't find in most of the exchanges.
Right.
So you can't. If we are talking about large amounts that you need to buy, at the traditional markets, you can place an order via your algorithm, buy $100 million share of Microsoft, for example, and the algorithm will buy it over the day. On the crypto, you don't have it. So
Right.
that's why that's why it's limit the institutional adoption. And let's say that that's why you are mostly of institutional, we use the OTC brokers.
Right. Yeah. So we hear a lot about big crypto traders, institutional crypto traders and investors using OTC desks. So is that sort of a sustainable solution? Is that something that can carry over into the long term? Like, do we really even need better cryptocurrency exchanges if these OTC desks are sufficient?
So OTC desk provides institutional with liquidity solutions. OTC desk can offer liquidity for large transactions of large amounts, while exchanges cannot provide this. As I mentioned before, at Orbs, I developed a crypto trading infrastructure with most of the Tier 1, Tier 2 exchanges and implemented infrastructures with leading Tier 1 OTC desks. Institutions that have an interest to buy or sell large amounts of digital assets will need to do this through one of the OTC brokers, since large amounts can impact the price in the exchange. So at the moment, OTC is a preferable solution. One thing to note is the spread on which the OTC will charge you. So institutional need to compare the price between the OTC broker and, for example, GDAX, Coinbase, or the trade block, which is an average of aggregated prices from different exchanges, since there are no fees for OTC trades. The OTC brokers, they are charging spreads, no fees. In my opinion, the OTC DEX will continue to be the solution and will be the dominant player in the institutional side in the short to medium term, as the industry is not so developed yet, but the spreads they charge will narrow. And today, the unregulated exchanges have much more liquidity than the regulated ones, but I assume that in the future, this will be changed as traders and institutionals will feel more comfortable to trade in regulated exchanges.
Why is it that unregulated exchanges have more liquidity than regulated exchanges?
Because I think that because it's we are talking about it's not a mature market. It's on the early days, although it's not on the first day, but it's on the early days. So most of the many exchanges, for example, in Asia, they don't need any full KYC from the traders. You can open an account only with an email. BitMEX, for example, is one of the largest exchanges. It's not regulated. You open an account just with an email. That's all. So, and then you deposit your Bitcoin and you can trade. And this is one of the largest exchanges by volume. So, so I think that the unregulated are more popular because of the KYC procedure that the regulated one force you to complete before trading.
Okay, so but you said that you think that eventually regulated exchanges will have more liquidity than unregulated exchanges.
In the long term, I think, yeah. In the long term, yeah.
Why is
when we see because I think that institutional and even though retail, they will feel more comfortable to trade in a regulated exchange. That they know that someone is auditing the exchange, there are capital behind the exchange. So you have more comfort when you trade in a regulated one. When it's unregulated, there is no auditing. You can't be sure that everything is correct there. So
Right. Right.
That that's it. That's my opinion.
Yeah, and then we end up with a quadriga type situation in those cases and the worst kinds of scenarios. But do you think so? So regulated exchanges will eventually overtake uh, unregulated exchanges in terms of liquidity, and I agree with you there. Do you think that regulated exchanges will eventually overtake OTC desks in terms of liquidity?
In the long term, I think, but not in a year or two. The OTC desk will stay here. I don't think that the regulated one will take it. Will overtake them. I don't think so. I don't think so.
Right. Not in any kind of short-term future. So we've talked a bit about how regulation is needed in order for crypto and blockchain to achieve more widespread adoption, especially amongst institutional investors. I'm curious kind of what you see regulators doing at this point. You know, of course, you mentioned also this Facebook's Libra project and how all of a sudden, you know, we have regulators all around the world forming task force and, you know, calling for the project to come to a halt. What kind of role do you see regulators playing at this moment in the cryptocurrency industry?
So I think that in order for mass adoption to take effect, institutionals, and I'm talking now about institutional require clarity and trust, and this is where the regulation needs to come into play. Regulators need to put in place a coherent set of rules, regulation, and guidelines similar to those set up in the traditional markets. In addition, enforcement must be put in place, including penalties and punishments in order to deter scam and fraud. Certification and periodic audit should also become a requirement for exchanges, in my opinion. Institutional will then be able to trust certified exchanges as those meeting the required rules. Maybe I can talk a little bit about the tax laws with regard to regulations. So tax law needs to also be put in place to help institutional determine what the tax implications of their transactions. Because crypto has a global presence, it would also be preferable if much of the regulation is set up according to a global standard, so that rules are not different in each country. There is still much work to be done by the regulators, but we have seen the seeds of these processes starting in many countries worldwide. So all of the things that I just mentioned, I think that they will play a very major role in the mass adoption in the future.
Yeah, and you mentioned briefly having sort of maybe a homogeneous set of regulations that encompass the entire industry around the world. Do you think that what kind of time scale are we looking at when it comes to something like that? Do you think that that's something that could happen sort of in the near future, or do you think that we're going to be stuck with this, you know, patchwork of varying levels of regulation from country to country for a long time to come?
I think that each country will implement the tax reform. Maybe in the European Union, you will see some tax implications. One tax for all the European Union. But I think that each country will have their taxes. They will. I don't think that there will be one tax for all the areas.
Right. So there will be maybe kind of a mixture of things that happens in the regulatory sense.
I think so. Yeah, I think so.
What affects what effect do you think that Facebook is having on all of this, on the regulatory process?
I'm not sure yet, because that there are some, for example, on the Calibra digital wallet, you need to do some KYC. So this is something that the regulators can know who is doing what. So, but I think that we don't know yet the whole picture of the Facebook sphere. So I think that we know it in the next following months.
Ilan, can you tell our listeners where they can find out more about your companies and the work that you do?
Yeah, about Aleph-Bit, they can check our website. It's alephbittech.com. And Orbs, it's orbs.com.
Okay.
And if, with regard to Aleph-Bit, if anyone from the audience is a crypto trader and would like to join the trading program, the successful trading program, he's more than welcome to submit an application, and we'll be more than happy to onboard him to this successful program.
Awesome. Ilan, thank you so much for your time.
Thank you very much, Rachel. Thank you.